Hello, Warriors. It's beginning to look a lot like Christmas. Alexander on vacation in Brazil. Rand, how are you? Hi, Ryan, Michael, Weisberg, AJ, George, Patrick. How's everyone doing? So, hi, Ryan. Good morning. How are you? Who else is here?
Hi Dale, I'm
How
very
are you,
well,
buddy?
thanks, mate. How are you?
Pretty good. So, I know you didn't want to talk about the yen last week. How about this week?
Oh, I've got plenty of sound of the yen this week.
All right. So, is it possible that we washed out all the longs here? And if yields, which, I think can, put in some type of bear market rally that could take them maybe back towards 460, would that be enough to then shake out all the shorts above the
Yeah,
high?
possible. Yeah, possible. Dollar yen. Yeah, I don't think the longs are. All the longs are close to getting shaken out there. Probably some of the short termers from maybe the middle
Uh,
of the year,
Yeah.
because the trend since the start of the year has been bigger. That June July move is just the second phase of the longer trend. Um,
Okay.
what it's all done, you can look at it now with sort of a clean view. We've had the Fed expectations for cuts going to the extreme. We've had the Bank of Japan bombs dropping from the
Yeah.
hawks or hawkish sounds. It's given us a taste of what's to come, if you know what I mean.
Oh,
And now that's
okay.
all been reversed because the Fed and have said, we're not going to talk about cuts. We had that Wall Street Journal piece. We've had better data, and we've had the Bank of Japan sources and officials coming out and pouring cold water on what UEDA said. So we're
Got you.
back to where we started it all.
Okay.
And now I'm expecting to see in the price action what I've been waiting for, which is a more hawkish sounding, we're not ready to cut yet rhetoric at the FOMC, and the Bank of Japan doing nothing on the 19th. And then that, if all goes to plan, we'll see dollar yen going higher, maybe 148s, 149s, who knows? And then I
Okay.
can start thinking about my shorts properly.
Okay. Um, yeah, TLT, I pointed out last week, stalled at the 200-day. I think it's possible that we pull back to 88. That'd be about halfway back at a 14-point move. So 89's about halfway back, 7 back, and here's some moving averages. So yeah, so we'll get a little reversion trade after the euphoria of lower rates could filter into that. One other thing I noticed on the S&P on the daily, we took out the July high was 4609,
Yeah.
and last night I think we traded 1020. So be alert if yields pull back. We really haven't made a lot of progress in the last couple of weeks since I don't know, 22nd of November before Thanksgiving. And I guess, 4550 would tell you last week's lows. We take it out that, could pull back to 4400 with bonds coming back.
Has
Um,
the narrative changed for stocks because it was going up when everyone was trading Fed cutting, and now Fed might not be
yeah,
cutting as much, and stocks are still going up. So is that
yeah.
the better data we've seen? You
I
think?
think that's chasing performance and, just a lot of liquidity chasing things. There are certain things that aren't making new highs, but I don't think, you know, I think that they're going to wake up to the dot plots not being the way they have traded it for the last few weeks. So,
Yeah,
it just, wouldn't be the end of the bull market to pull back to 4,400, just like in bonds. It wouldn't be the end of its bull run if it pulled back to 88. It would
yeah,
just be
a
a
refresh.
corrective move.
Yeah.
So, um, gold, weaker than silver today. Um, but I think we're getting to levels where we might have some type of pop, but silver's acting even better. But it's hard to ignore what happened last week, right? I mean,
Yeah.
these were massive, massive reversals. Markets usually don't turn the week after. They can bounce, but for a sustained move to the upside after that kind of candle, it's not a high probability in my view. What
Yeah.
do you think?
No, I agree. It's not your typical price action, is it?
Yeah, I saw Jim Walsh. He was saying that this move in gold, instead of it being, if you look at it on the weekly, someone even pointed it out to me that it was like 1, 2, 3, but that this could have been a B wave completing and we could get a C. So, I think the picture changed at least, short term, maybe
Yeah.
into early next year. Just my view, gold silver ratios back at some pretty important resistance. I've been looking at the dollar, and we've tried that 104.20 a few times, and doesn't seem to be able to make much more headway on that right here.
Yeah.
Nice inverted head and shoulder pattern right there that you see there.
Okay, so this
Yeah,
would
and good
measure
morning.
105, Blake.
Well, we had to break 104.30 first, and
Yeah.
there's so much happening this week that we have to do that first. First things first, right?
Okay, yeah. So I guess we'll see. The CPI should be the catalyst, right? One way or the other, maybe.
Hell, it could be it could be the 10-year auction today, or the 3-year. I doubt the 3-year, but maybe the 10-year auction today could be the catalyst that drives the yield, drives the
Dollar
yields higher.
yields. Yeah. So you kind of agree that we're going to get a bounce in yields up here from here.
I mean, it seems like it. The momentum seems like that short term. But all I know is auctions have been moving the market quite aggressively the last few weeks. And 2 weeks ago, I'm like, okay, mark your calendar for December 11th. That's today, because that is the next major auction that we have, and that is today. So there's a good chance we could see a really, really explosive move. Positioning.
So instead of it being the Fed, it could just be sloppy auctions that propel yields higher up towards that 460.
I think it could be end up being like a 1, 2, 3 punch. So between that and CPI, and then you got every other central bank meeting this week. I don't know. It's just I know that today, don't sleep on today. Today is not the day to say, oh well, CPI is tomorrow and every other central bank is Wednesday, Thursday. So let's just nothing's happening today. Not true.
That's
not true.
Kind of like the last full week of the year, right? Because we have the holidays coming up.
We do. BOJ meets next week, right, Ryan?
19th, yeah, BOJ.
Yeah. Why do they have to? Why couldn't they just do it this week like everybody else?
Yeah.
I mean, seriously, that's probably the only thing that we're going to be hanging around for next week, I would assume. But yeah, you're right, Dale. It's we're getting into that very, very, very poor liquidity situation.
S&P, Blake?
It's at highs. I mean, we talked about 4,600. Here we are. And I think it's make it or break it levels. I mean, like I said on the week ahead video, and I've said it every day this last week, just, while we're above 45.35, no reason to be on the short side.
That's your number.
That's the number. I mean, we get below 45.30 and then that opens up a trap door. And I think that anybody who's bullish is going to be really, really cautious. But it doesn't seem like there's anything that's rocking the boat right now. Although if you look at Bitcoin staged a really big reversal last night. Gold looks ugly. Dollar looks strong. Commodity currencies look weak. Even emerging market currencies look weak. You add that all together, and I don't think stocks should be up here, but they are. Just because I don't think they should be up here doesn't mean that they won't be. So,
Right.
you know, when you have everything else leaning the other direction, it's hard to get behind, you know, just getting long risk. But at the flip side is everybody's FOMOing right now. So, you know, what's to stop that?
Here's a subtle thing right here on the daily, right? So making new highs. Actually, you know what's interesting? I said to Ryan earlier, the July high was 409.90, and I think last night's high was 410.20. So I mean, you know, people that were protecting themselves with stops here, you know, hoping they got those. So anyway, VIX is opening strangely up 78 after closing at new lows. So these are the market conditions you could have a bear raid. And if, you know, if things start coming off like you talked about a few weeks ago, the people who chase performance, um, you know, might have to lighten up into the next couple of weeks. So
Well, yeah, if I was a bull and I was chasing performance, I was in full on FOMO mode right now. I would be
yeah,
like, if we get
getting
below
out.
4,500 in the S&P, get me out. But until that happens, just, you know, let's stay long. Let's, you know, continue to buy shit. So, you know, you got the DAX at all-time highs. Even today, I mean, we're maybe off the highs just a little bit, but we're still holding in the gains. You look at some of the other European markets, they look good, but you know, remember, Dale, everything looks really bullish when you're at resistance,
Yeah,
right? I mean,
yeah,
everything looks, as you're heading into resistance, everything looks super bullish. And then resistance holds, right? So it's
yeah.
such a big week this week. As far as the S&P goes, or, you know, stocks risk goes,
Wow.
I'd be really careful, you know, chasing up here. I probably would rather, you know, be in other markets this week, like short gold right now. Gold, if you know, we've got this little, you know, false
Let's see
breakout
what
you
you
were
got.
talking about. What's
Let's see
that?
what you got. Let's see your chart. See what you got
Yep.
on the gold.
I'd be more than happy to.
Okay, buddy.
Yeah, and we put in a here, let me pull up. Where is I changed I had a monitor go out over the weekend, so that was fun. Um, you know, so anyway, so you
Was
can
that
see we have
before or after the concert?
it was before. It was
All
before.
right.
Yeah, you know, if anybody likes rock and roll, I tell you what, I went to a hella concert on Friday night. Um, but you can see there's the gold target of 1900 for pattern and play. What that is basically an ABCD, an equal leg move. You can see it right here, and you can see this complete reversal. And remember, this is just you know, captured everybody on the wrong side. So
Yeah.
and now we're starting to break down. And you could say, well, it's a head and shoulder pattern. Whatever, is we're below the 38% retracement. So now anybody who's long is probably second guessing, you know, their positioning right now. So that to me is
I think that
pretty
target is
negative.
viable
What's that?
sometime. I think that target is viable sometime in the next several weeks.
Yeah, I think so. That's what I wrote, is over time, you know, I think it's
Yeah.
very doable. And you know, if you look at gold as a wedge, right? That was a false breakout above the wedge. Wedge
Yeah.
support's going to be back down here at 18, you know, by the time we get there, maybe 1870. And and you know, will we break down? I think it has more to do with what's happening with the dollar, and, you know, and what's happening with everything. If we head into a deflationary period, Dale, and you start to see gold break down, guess what the talk is going to be?
Oh
Oh,
yeah.
gold failed as an inflation hedge, and now we got
Yeah.
deflationary pressures, and you know,
Yeah.
now
Yeah.
we're going to sell gold. I mean, we'll see what happens, but I would be very careful if I was long gold. Let's just put it that way.
Got
I don't know if I'd
got
want to
it.
be on the bull side right now. So, but it's going to be a really, really busy week, Dale. It's going to be, and it starts today. Like I said, we have the 10-year auction that is at, let me make sure I got my numbers correct. The 3-year is at 11:30 a.m. Eastern, and the 10-year is at 1 p.m. Eastern. So wherever you may live and wherever you may reside and wherever you're trading from, just keep in mind those are the times where you could see some really big market moves. It's about a minute after the auction results come out. So and you were just talking about yields. I mean, we came out of this wedge. Didn't you point this out last week, Dale? Weren't you the one that said, "Hey, don't we have a little wedge right there?"
Yeah.
Yeah, and you know, we're coming out of a descending wedge. So for right now, it looks pretty bullish. I don't know if I'd want to stand in the way of that, to be honest.
And where you have it anchored is kind of where the moving averages come in. Looks like about 450, 460.
Yeah.
The top of your wedge up there, where you bit down there. Yeah.
I know you could do it right here. I know you're looking at this, your eyeballs right there, but I'm just looking at from a Fibonacci retracement standpoint.
Halfway.
38% retracement takes you to 445. So that looks doable. And, you know, remember, we got a 10-year today, 3-year today, and a 30-year tomorrow. And so those are going to be, you know, market movers. And tomorrow it's going to be after the inflation data. And then, you know, then after the inflation data, but before, you know, the Fed on Wednesday. So we got so much happening this week. And I know a lot of people have, you know, are kind of like sleeping and
calling
say, well,
it a year.
I'll just come back on Tuesday. Yeah. I don't, you know, good luck.
If you're in next year.
Yeah, some people have checked out till next year. You know, this is probably a really good reminder, Dale, to talk about, you know, being very careful at year end, because you got people like Ryan. You know, Ryan's very, you know, he told me, hey, I'm going for broke, and I'm gonna go all in and red or black this week.
Yeah, I've done that.
If only
Dale
I
said I've done that. Dale,
if only I didn't have video evidence.
Actually, how about you, Ryan? What do you say about this week?
That's what I'm saying. If only I didn't have video evidence from the Flow show to say that I said exactly the opposite to that. You might have a point, but yeah, this week's going to be a very volatile week. You know, we're jumping between data points, central banks. You know, even after the central banks, you know, you look at the Fed, whatever the Fed says and does, whatever the market says and does, that gets put to the test the day after with retail sales the following day. So, you know, it's all going to be very hectic. And then towards the end of the week, once we're over the last of central banks, we even start getting the flash PMIs. So, and then from that, everyone's going to start closing up the books for the year. For the holidays, and it's all going to get topsy-turvy. So be very careful.
Yeah, and I have only $1 position, and unfortunately it's the dollar yen. I traded the snot out of it last week and did really well with it. I'm short some dollar yen, right, and it's got right to the levels that I figured we were going to go to. I just didn't think it would get up here so quickly, you know. But there's some news that came out overnight with the BOJ saying they have little need to end negative rates. You can see it right here on my screen via Live Squawk. That was on Bloomberg. And, you know, that you were talking about a little earlier, but I'm telling you, I'm pretty agnostic with the dollar index right now. But this is a nice setup. If you haven't seen this inverted head and shoulder pattern, here it is. Yeah. You know, it's a really nice setup. And did you guys see this? And let me get rid of, I want to show you the US dollar CNH, because I know, well, we talked about it in our chat room, but you got a little inverted head and shoulder pattern here. So you got the dollar really building strength, you know, kind of across the board, but we are coming into pretty key resistance. I mean, while we're below 104.30, I don't think there's any real reason to be, you know, aggressively long the dollar at this point. So my dollar positions are very, very light right now. It's limited to dollar yen, and it's not a big position. So how do you feel about the dollar this week, Ryan?
I'm expecting that we should see it maybe a bit higher. I'm expecting Powell to give more of a pushback on rate cuts than he did at his last outing. So yeah, I wouldn't be surprised to see dollar higher. Dollar China, I wouldn't be surprised to see a bit higher. You know, it's higher in part because of that crappy CPI over the weekend, and you know, rate cuts are still on the table over there. So that's one. Excuse me, that's one that could push up a bit higher. But yeah, dollar yen's going to be my main focus for dollar trading this week.
Yeah, and you know, we're Dale, you actually turned me on to this little blue trend line here. Oh, I'm sorry, it wasn't you, Dale. It was actually Steve. Steve
Okay.
had identified this blue trend line. It was because I didn't have it on my screen, and then we broke it last week, and like Ryan said, we're right back to where we started. You know, following those comments from Ueda. Now, even though there's pushback, it wasn't from Ueda, but it was from other BOJ officials, which I find interesting. So, you know, as far as Ryan, you know, when you're looking at gold and you're looking at this move in the gold market, does that lean you any does that lean you any direction in the dollar? Like for me, it's like I do not want to no, not the yen. The yen's a completely different animal. But when you're talking about like the euro or the Aussie or, you know, the Kiwi or even the sterling to a certain extent, I have a hard time being, you know, short dollars. Again, yen is on its own program, as it usually is. But I have a really hard time being long dollars or short dollars while gold is breaking down like this.
Where do you
Yeah,
think the?
I'm not.
Oh, sorry, I
No, go
forgot
on,
to
mate.
ask. No, I'm
Go
just
ahead.
wondering, Blake, where you think euro could go to if you're, you know, have that dollar bias.
I think we could trade probably right back to the 618 retracement at least. And I mean, if you're talking 1900 and gold actually does that, then why couldn't we make it back to 105? And I have to point this out here. Let me grab this really quick. And then Ryan, I'd love to hear what you have to say too. Here's the, you know, COT data. And you can see speculators, which is in green right here. They continue to, you know, accumulate euro longs, and that's non-commercial, large speculators, asset managers. They just continue to get long euros on these dips. So, and they never really faltered when we were trading up near 110. So, you know, I sit here and I'm like, why couldn't we head back down to 105? Because you got all this, you know, this speculation along euro right now. So anyway,
Okay, thank you.
just to answer your question. But Ryan, what do you think here?
Yeah, well, on euro, you know, for once the specs have got it right. You know, they're long and they're staying long, and there's no reason to suggest that longs aren't still the way forward, because we've only managed to pull back to the 50 fib of that move from the 105s, 104 and a halves. So, you know, the trend is still valid, in my opinion, unless we get under that 50 fib and then take out the 61.8 fib as well. So for me, being long, I've no reason to change tack just yet, unless it pulls back a bit back further under those fibs.
Gotcha. All right. Well, let me ask you this, Ryan. Which one? I know everybody's looking at the Fed, you know, but we have the European Central Bank, Bank of England, we have Swiss National Bank, we have Banxico, we have Norges Central Bank. Which central bank is on your radar the most aside from the FOMC? Because we're going to talk in nauseum about the FOMC over the course of the next couple of days here. So
Papua New Guinea.
New Guinea. Got it.
Papua New Guinea. Yeah, that's the most important one. No, I think the cleaner trade might be, if trading between central banks, might be between the ECB and the Bank of England. I expect the Bank of England's going to maybe be a bit more hawkish than the market expects, because the sticky inflation. I think that could see a lower euro sterling, which goes against my long, but you have to be objective in trading. So I wouldn't be surprised to see lower after the Bank of England. I think we'll see what it does an hour or so later on the ECB. But yeah, if you, and Kay's one for telling this, if you want to get away from your dollar exposure, you've got to look at some of the crosses. You know, if you think between the CPI, the Fed, and everything else, the dollar's going to be you know, a bag of spiders, then look at the crosses. Look at some of the other crosses, maybe euro crosses, pound crosses, against maybe some of the commodity currencies like you know, like you got the Euro Aussie, Euro CAD, something like that, you know, pound Aussie. You can look across the others just to get away from that exposure, maybe trade the pound as a more cleaner trade on the Bank of England, and the same for the ECB. So there's going to be plenty of opportunities. You do the same thing you do all these big weeks with all these central banks. You go over your charts, you pick your levels. Where would I like to trade if XYZ happens? And then you just sit back and wait. And if you get that level, then you look to trade it or you don't trade it. And if nothing happens in between, then maybe you do nothing and you keep your money safe. And Merry Christmas to you all. So yeah, just do your homework, pick your levels where you would like to trade, because that tells you where you're going to be wrong as well.
You know, one of the central banks that I'm kind of eyeing, and I've already gotten ahead of this because you know, if you guys are in the ForexAnalytix community, you know, I already picked up the Euro Swiss on the long side. But the Swiss National Bank could be an interesting central bank. They could actually look to cut rates before you know, others, and you know, they might come out a little bit more dovish, and if they do, we had a false breakdown here below these lows. The Euro Swiss hasn't really bounced a whole lot yet, but you know, if we start getting, you know, above this like 95.20 level, maybe a little higher than that, we might get moved back up to the 50 DMA, and then the 200 DMA is not too far away. So I'm this is going to be like my focus this week. Again, removing dollars, because I agree with what you have to say here. Removing dollars out of the equation. I kind of want to focus on other central banks this week, and unless there's something definitive that comes out of, you know, either CPI print is way out of whack, you know, whether it's, you know, more disinflationary, deflationary type of data, or we have the Fed, you know, you get a lot of pushback from Powell, and he ends up being a lot more hawkish than expected. Then I'll refocus on the dollar. But I think other central banks might provide some really good opportunities this week. So
how about USDMX, Blake?
I'm well, if you watch the week ahead video, that was one of my setups this week, was the US dollar Mexican peso. I like it, and especially above the 200 DMA. So we got a nice wedge pattern. You can see it right here. I'll pull up
higher
the
low. It's a nice look.
Yeah, it's you can see a nice little wedge pattern developing, right? And so you notice these intraday highs get a little lower. That's because it's capped at the 200 DMA. So if you look at
that's an ascending triangle.
That,
yeah,
it should break to the upside, I would think. And I was playing the US dollar Mexican peso long the last 2 weeks from these lows. Yeah. And I still want to be long. So a break above 1755. Now, remember, this is another thing with Banxico. Banxico might really turn dovish. Remember, a lot of LATAM central banks are already in their cutting regime mode, however you want to look at it. So Banxico could be one of those central banks that comes out really dovish this week and sends the US dollar Mexican peso higher. And that's like one of my one of my three setups this week. What
would risk off support the move to the upside?
100%. Yeah.
So if we had risk that's off, another thing. You know, with the S&P's grinding higher, USDMX is, you know, might be a tell.
Yeah, I mean, there's a lot, I think, moving the dollar mex, and a lot of it has to do with Banxico removing And that, was way back here earlier this fall when Banksco basically said they're removing their operations that they've had ongoing since COVID, which was intentional of strengthening the peso. They've reversed that, and that's what's caused this base, I believe. Even though I don't think the dollar Mexican peso is heading back to 22 or anything like that, I do think there's room for a recovery back towards 19 or 20 in the months ahead. So and it's obviously it's one that you have to be really careful holding on to it for a long period of time, because it will eat away at your profits with the carry costs. Yeah, but if you can get some momentum, like above the 200 DMA, you might get a quick 2-day sprint back up towards 18, and this is a really nice gain in a short period of time if we get a squeeze. So that's one I'll be keeping an eye on.
Glad I brought it up.
Yeah, me too. I'm glad you did.
Look.
Yeah, and if you guys just remember on the week ahead video, I actually cover my top 3 setups of the week. I review the previous weeks, and I've been doing that for a month. And so you guys can say, oh, well, Blake's top 3 trades of last week were this, and this is how they turned out. And here's this week. So make sure you check out that week ahead video. All right, Dale, I'll pass it over to you. Ryan, thanks for being here. I guess K-Man, I know he's still trying to turn the corner, so hopefully he'll feel better as the week goes on.
Yeah, cheers, guys.
All right. Nice talking with you guys today. Ryan, thank you, buddy.
Thanks, mate.
Blake, thank you.
Thanks,
man.
Coach.
A lot of good looks from the 3 Musketeers. All right, so now we have really, the opportunity to look at some Wyckoff work by our friend Bruce Fraser. Bruce, welcome back to F.A.C.E. I always look forward to talking to you and seeing what your point and figure stuff is doing. And welcome back. Hope things have been going okay for you, buddy.
Dale, great commentary this morning. It was great. So hi to Ryan, hi to Blake.
Hi, Bruce. Good to see you, man.
Bruce.
Hey, great. I never know what you guys are going to talk about, and so I just have a big pile of stuff here. And but I try to create some perspective that is maybe a little bit different, but on the same topics. And so hopefully I can accomplish that today a little bit in the time that we have.
You usually do, Bruce. So I mean, I am able to pick out some ideas from some of the things you say every time you're here. So here we go. Where you want to start with the dollar ETF?
I'm just shocked that you even invited me back. So it's like, what the heck? Anyway, so now I don't trade the currencies, but I do pay attention to some surrogates. UUP is a surrogate, and I do that because I can do point and figure on it. And just this particular chart, very big time frame. In this case, it's a 60-minute chart. But what I really want you to see here is this classic Wyckoff distribution structure. And it's really beautiful. It has an upthrusting action after forming a buying climax, series of secondary tests, and upthrust at the conclusion of the distribution. Then look at this outright failure. Yeah. And this failure all occurs, which tells you that this is an upthrust after distribution.
Yeah, that was a CPI. That was a very ugly day.
Oh my God. And so, and then a rally of very poor quality that goes into the area of resistance, and then just an outright failure.
Well, maybe that was a CPI. I'm not sure which series of O's, but it was one day that, really just cracked the back of the dollar.
They were oh no's. They were oh no.
Oh no.
and so notice here how you're getting this attempt to consolidate and rally below this critical resistance at 29.65. Yeah. And so it wouldn't surprise me, even as Blake had pointed out, that there could be more rally coming in the dollar, but from a position of vulnerability. And so we take a distributional count of this structure, and it takes us all the way back down to the area of the June lows for the dollar. Now this is in UUP. And so we'll just have to watch to see whether or not it can rally. And then if it then fails back into this we would call redistribution, and could keep going down with some more oh no's. I'm going to use that. Anyway.
Yeah, I like it.
But
what are you going to use for X-ray vision?
Yeah, right. That's it.
All
yeah.
right.
It's a good thing.
Yeah.
So just taking a minute to look at the stock market, the S&Ps, because you were all talking about it. So we basically started to see the evidence of stopping action back in June of 22. We call this preliminary support selling climax. We've actually met and talked about this in the past, this very chart, Dale. And this chart's a big mess, but it's really my notes. And so I just keep publishing it all the time, and I just keep, adding notes to it as we go. And we started doing this back in the distributional top back in late 21. And also I'd point out, because you all were talking about the end of the year, and I'd like to point out that the bull market top struck right at the end of 2021. And so this was, Blake called it FOMOing. So here's another example of FOMOing, which is very good. And so, and then down we go. But we built this beautiful accumulation structure, and we've done point and figure work on this. We had a beautiful swing trade in June of 22, another one in October, November of 22, and then completed the accumulation, and up we've gone since, even more dramatically in the NDX. But what I really wanted to show you down here is this breadth indicator, which is the percent of New York stocks above their 50-day moving average. And a beautiful base back in October. And this is actually what we would call a divergent condition, because look at the lower lows that we got into key support here in late October, unconfirmed by this breadth indicator, which did not follow the market lower. That's pretty darn bullish. Similar thing occurred a year ago, October, and it created a nice rally phase thereafter. And we've had a really good rally since. We're back up to the resistance of the July high. But now we're starting to get into the resistance of the bull market peak. And so this, I think, is going to be very interesting to deal with. And I've got some point and figure work that might help us with figuring out about the how high this market could potentially go.
Okay.
But anyway, we're overbought here, Dale.
Yeah.
But what I look for is I look for a set of conditions: overbought and building some kind of a stalling type action or topping action, and then a reversal into a downtrend, even just emerging. And that downward stride from an overbought condition would be the thing that would really indicate to me that we have a reversal of trend. So until we get that, we could stay overbought up here and continue to be overbought into next year. And so we don't want to get ahead of the trend per se.
Could we get a pullback to 4,300, Bruce, and then make a new high, and then look for breadth divergence if the market makes new all-time highs after pulling back, say, to 43?
No question, we could do that. Absolutely.
Okay.
And so, and I never know where Dale wants to go. So let's just go back here. This is a chart I've shown you in the past. You'll note here, this is actually October of 22, making the case. We traded this swing trade. Here's the October low, traded this up to the resistance area and said, oh, we're going to build a larger cause and we're going to pull back again. And this count could be even bigger. And this is in fact what happened. We did just that. We rallied up into here. We pulled back again. Look at these counts though. Now we have these, what I call segmented counts. And this one here took us above the highs of August of 22. And then this count which is this whole area across here. Look where it counts to. Counts as high as, yeah, 65.50. So but some things need to happen. We need to get above this resistance area, and this can take time. We can use point and figure to estimate extent, but we can't estimate time. And so here is another chart. It's this, now this is the 1920 reaccumulation, and look at how beautifully it struck the highs here. And but here is really more of what I'm interested in looking at. This is what we just looked at, but a cleaner picture that I just recently made, 3-box reversal 50-point scale. And this count across here is the one we just looked at. And this count takes us up to, look, it confirms basically the count that we just looked at on the prior chart. And so now we have two really interesting confirming counts that go up to new all-time highs. And so I think that's a reason to continue to stay oriented towards the bullish side, with the caveat that we have a lot of work to do to get through this area. But I have some other perspective here about what could happen in the year ahead, which could help us. And so, where would you like to go? You want to talk a minute about interest rates, or?
Sure. You know, last week was a big week in gold, and you know, a lot of people are following gold, Bruce, and that was one heck of a reversal after making new all-time highs in Asia and then putting in a big reversal. So
yeah, and I didn't, and I apologize, I did not put in a chart of gold itself. These are the miners, GDX as a surrogate. And so this count, now this goes back to November, but this count here, you can see we're making the beginning of a swing count with a hinge forming. And then here,
still bullish.
And you could see here, this is through Friday. And this count takes us 40 to 45, a bigger accumulation structure. It's kind of a beauty. And this count confirms that count, which is a very good thing too. And this counts up to 41. But I just wanted to point out that it's kind of a critical juncture, because we've jumped above this 30 resistance area and then pulled back, and this is through Friday. And so we pulled back to this $30 level. And I think it pretty much needs to hold right around this zone, because if we start to fall to 29, even 28, we're falling back into the structure. May mean a bigger count, but it could mean that this is just redistribution for another decline. So we need to stall here and start to rally back above this 30 level, 31 level ASAP. And
we got to almost 32. I don't know, your X doesn't show it. I think the high was 31.90 or something like that.
Yeah, it would have to have actually just touched 32, and then we would have got another.
So you don't get the X if it touches it but doesn't close there. So
exactly. Yes.
Okay, got it. Yeah, rates are important. Okay, yeah, let's see silver here. That too, silver, also. Yeah.
Another swing count. And here we have a big structure, but again, same issue. We have a nice accumulation structure here, and we have a swing count here, which goes to 35, gets slightly above the resistance level, but it needs to be able to stall in this area where there's minor support, and then start to turn up again, and to get going. And I completely, and this is actually 43, not 53, so I have to change that. 43, 44. But I completely agree with the analysis that you and Blake offered, which was that, you know, gold had a really bad week last week. And that was a big, nasty bar, which took it right down to support. And it needs to just stop, and stop in the area of this key support. But you know, that's more of a hope than it is an analysis for the
I hear you, for people that are, you know, sat long through it. You know, rates, you brought up going to rates. It's important. I mean, we have all these central banks, as the guys talked about today, and TLT had one heck of a rally from 92 up to, you know, 96. So I'm thinking that we're going to stall up here and pull back towards 87, but you have the Fed funds up here. That's fine.
Yeah, and I've got a couple of charts that speak to what you're talking about. But I thought for perspective, it might be good to go back and look at the 2-year yield, Treasury 2-year yield, and the Fed rate together. And so you can see that what happens is that the 2-year with the red line is really setting policy, and then the Fed follows. And then the Fed finally catches up with the yield on the 2-year, like here and here. And this is the top of a bull market. So this is the S&P down here. And this is arithmetic scale, and that's why it looks so crazy. But here you can see that finally the Fed gets the Fed rate above the 2-year and then holds it there for a year. And then when rates start to fall, and this is really the point I want to make, is that when rates start to fall as determined by, say, the 2-year, is that good news or bad news? Because my experience, and we do a workshop on the business cycle and investing and trading through the business cycle. Joe Turner and I, my old business partner, and we're going to do another one in February. But this, when it starts to fall, this has normally been associated with recession. And so I think all these people that are looking for rates to go down might want to be careful what they wish for, because if rates start to go down, it could be just because the general economy is weakening. And you can see that that is the case here. That's the case here. That was the case here. And now look what's happening. So the Fed rate is through November 1, but this 2-year rate is pretty much up to date. You can see it's turning down. And so something, a point of caution, that if this starts to go down in earnest, then it could be a sign that we're having a turn into a slowing economy. So now having,
yeah, go ahead, Bruce, finish it up. I just wanted to ask you if you saw on your work with what you just said, with rates turning down, Jeremy Grantham says that the market, when that happens, doesn't bottom for another 6 months after the Fed starts cutting rates. Does your work back that up?
Yeah. As a matter of fact, if you look here, you can see rates start to fall here, and then you get down to this area. Well, look at where the Fed rate finally bottoms, and it's long after the stock market starts to go up. But look how long the interest rates fall with a falling stock market.
Yeah.
And this
that's
is terrible
years.
bear.
Yeah,
Exactly.
That's not 6 months. That's, you know, 3 years.
Exactly. And this period here had a lot of volatility in it, and you have rates falling. This was Powell's, I think, first big, you know, policy moment was when
in December, after he raised rates, where he held hands with Yellen and Bernanke,
and the volatility just took off. So, and then here's the COVID decline right here. So so this is the 2-year on the left, point and figure, daily data, 3-box method, but I'm using ATR to scale this. And this is the count that I had off this basing structure here. Look at this nice little shakeout low, and then it just turns up really hard. And we had basically said we could go 510 to 5.325. And this is in fact what we did. We went to 515 into the zone of our count. But then look at how hard it's failed. These rates have fallen. And of course, we've all experienced that recently with the reversal in rates. And I'm sort of the mind that this is a place where, as you all were saying, where rates find a low and attempt to rally. So I think we could be range bound for a while in here.
Okay.
And but if we just keep melting down from this level, I think it could very well be a sign that the economy is softening somewhat. Here's the 5-year. You can see here's our accumulation structure and yields, and it goes up, throws over the top of this area, and then you can see if I take this whole bigger count, this counts 462 to 504. We went right up to 490 and struck the middle of this count objective range. And so we fulfilled these counts. And then here is the 10-year. And the 10-year, you can see just a very big base. Yeah. And this count here, 430, 470, but then we have a bigger count, 480, 520. Here's what subsequently happened. We went to 490 and then reversed really hard. So we fulfilled counts on rates. And this is how I watch the Fed. I just do my point and figure work, and these counts were beautiful. They came early in the year, and beautiful stride upward.
What would it take for the count to shift back up towards higher, even if like we had this little bounce in 10 years, like to 460 and then went to 370? Do you think this is the final high yield, or just maybe a cycle within the secular?
Well, this is, yeah, and I didn't bring any long-term work on the bond market, and I do point figure on prices too, but there's no reason, Dale, that we just couldn't stay in this big trading range.
Okay.
And for a period of time. And actually, as convoluted as that sounds, I think that would be maybe our best outcome, because I don't think I think the Fed's going to be very reluctant to cut rates. I know there's a lot of desire or wish for that, but
yeah, everyone's dreaming of the old days and having the Fed put again.
Yeah,
and they haven't even needed it, really.
No, and exactly. And here is kind of an interesting twist on our discussion, because look at what we have here. Is we have the SPY which is the S&P ETF to the TLT 20-year treasuries, and basically it's a relative strength chart, point figure study on relative strength. And so you can see these beautiful little structures give these nice counts. Hit this one right on. This little count here counted up to this area. This count went to here. And now this count across this area went right up to the highs. Now look at this beautiful classic distribution. Looks very similar to what we saw in the UUP. So we see this big distribution structure, and then the oh no's and the uh-ohs, and down it goes. And this is a big breakdown in the relative strength. Now, what this means to, and everybody's already figured this out, but this downward stride means that bonds are now outperforming the S&P 500. Right. And how far down could it go? We just
that hasn't happened in a while. Look at how long,
Exactly. Yes.
Yeah.
And so normally the stock market in recent years has outperformed the bond market. And now all of a sudden the bonds are the asset class that's outperforming and could become the asset class of choice, especially if we get a slowing economy. And then let's see, is this the no, this isn't.
So that would say basically buy dips in the bond market, sell strength in the stock market.
Right. And I had a chart of the here it is right here.
Oh,
I didn't
the
have
banks?
time to do the counts, but this is the triple Qs is, you know, the growth stocks
Right.
relative to TLT. And so I put the vertical here so you could see this, but look, the beautiful distribution structure. So now we have, of all things, the growth stocks have been forming distribution against long-term treasury bonds, TLT.
Yeah.
And here is our point and figure chart of this. We can count all the way across this area, which I have not done yet, but you could see that this is going to count down here into this zone at least. So how about that? The idea that the bonds could outperform the
Magnificent
mega
Seven.
cap Magnificent Seven.
Yeah.
And so very interesting situation there.
Well, you outdid yourself again, Bruce, every time.
Well,
you know, I'm really really nice looks and analysis. Elite. I would give it the E word. Elite analysis.
Dale, you treat me too well. And but I always just love to hang with
it's
you
so
guys.
hard to get people to come back. I have to, really,
yeah.
butter them up.
Yeah, I have.
But I'm
that.
not patronizing you, Bruce. Your work is really top shelf. So
well, Dale and I are both very old school Dean Witter guys, and so we love hanging out and lying to each other.
Yeah, well, they had a branch office in Sears, and I couldn't sell stock, so I sold the washing machine.
Yeah, now there's no more Sears.
Yeah, there's no more a lot of things. No more Pac-12. I can't believe that. That's like the end of the world anyway.
And then we have
me.
two just great teams in the Pac-12 that were ranked so well, and it's no more.
I tell you, I think they're going to move Christmas on us next.
Well, yeah. What's the world coming to?
Anyway, Bruce, as long as we have you and your X and O's, I really want to thank you for coming here and sharing your great work with our community. And
well, it's always a pleasure to be with you all.
Happy holidays to you, and I'm
happy
a fan.
holidays to everybody, and
I'm
thank you much.
So my trading warrior brother, Bruce Fraser, best place to follow you. There you go.
There you go. So a lot of free stuff at Wyckoff Analytics. If you have any interest at all in Wyckoff, it's a good place to go to learn more. And also Roman, my teaching partner, and I do a weekly series, Wyckoff on the markets. And so you might enjoy checking that out sometime. Every so often we do a free one. The October one is right there for viewing. You can just check a little bit of that out. But Wyckoff Analytics, a lot of free content.
Well, Merry Christmas, Happy New Year, Bruce. I hope that pips rain down on you and your subscribers and your partner, and that you have peace and health with you and your family.
Well, and to you all also.
All right, Bruce Fraser,
Thank you,
everybody.
Dale.
Great having you, Bruce. I'll be in touch, buddy.
Okay, be good.
All right.
Bye-bye.
So check out Bruce. Should be part of your intelligence gathering, and you could join the team in 17 minutes on the Morning Edge. That's a wrap for me. Don't just count your X's and O's, count your blessings, and I'll see everyone tomorrow for Turnaround Tuesday. Adios. Thanks again, Bruce. You're welcome, Alexander Lowell.